It's another edition of the Trading Tips video newsletter, teaching you how to become a successful trader today. This video newsletter is brought to you by tradingtips.com.
Welcome to this edition of the tradingtips.com video newsletter. In this episode, we'll be looking at an actual Portfolio Crafter stock pick made for the week of April 18, 2011. The stock we're looking at is WMS Industries, ticker WMS, which is a company that produces and distributes slot machines and video lottery machines for use in casinos and other legal gambling establishments. Without further ado, let's begin. First, a little background on WMS. As stated earlier, it makes and distributes slot and video lottery machines for use in legal gambling establishments. For the fiscal year ending June 30, 2010, WMS reported earnings of $112.9 million on sales of $765.1 million. It has a total market value of $1.81 billion, and its shares trade on the New York Stock Exchange. After the closing bell on April 11, WMS released a preliminary earnings report for the quarter ending March 31. It revised earnings down to negative 16% year over year, which is the second straight quarter of lower than expected earnings. This is not a good sign, of course, but the market's reaction to the news was far too harsh. Overnight, shares of WMS fell by 17.1%. Since then, the stock has closed higher each day, ending the week at $31.45. WMS appears to be establishing a new base, and at its current price levels, it looks like a good intermediate-term buy. Depicted here is a price chart for WMS, along with Bollinger Bands. The April 12 sell-off is evident, and notice how the stock has moved higher each day since, ultimately closing inside its Bollinger Bands on Friday. This chart tells me the sell-off on April 12 was a drastic overreaction, and WMS is likely to slowly creep higher over the next several days, weeks, or even months. The firm will announce its official quarterly results on April 26, and with the preliminary announcement setting investor expectations so low, there is very little danger going into the actual quarterly conference call. Even before the stock crashed on April 12, WMS had a very modest valuation. Now, however, it is clearly a bargain stock. WMS's trailing PE ratio is 16.6, which sounds pretty good on its own. Add in the fact that the average PE ratio in WMS's industry is negative 94.3, and it becomes truly clear just how undervalued WMS is. A negative PE ratio indicates the average firm in WMS's industry is unprofitable. So why is the reliably profitable WMS given such a low valuation? Even by historic standards, WMS looks inexpensive, as its own 5-year average PE ratio is 28.5. At a current multiple of 16.6, WMS is trading at a 41.7% discount to its historic valuation. But when we look at things in terms of forward PE, WMS looks even better. Its forward PE, which is based on its current price and its projected earnings, is just 12.8. This makes its PEG, which is price to earnings over growth, an ultra-low 0.5. It is rare to see a PEG this low, since typically stocks with PEGs of 1.0 or lower are seen as bargain stocks. In other words, WMS Industries could double in price and still look like a value stock. Another reason to like WMS is its short ratio. As of March 31, the last day for which data is available, 8.4% of WMS Industries shares were sold short, giving the stock a short ratio of 5.9. Traders typically view short ratios of 5.0 or higher as being bullish, since it's harder for short sellers to buy back their shares without forcing the price of the stock higher. 5.3% of WMS's shares are held by corporate officers and board members, and an amazing 102.2% are owned by institutional investors. How is it possible for institutions to own more than 100% of WMS's shares? Once again, it's that 8.4% of shares that are sold short. In summary, this limited supply means that short sellers will have a very difficult time covering their positions without pushing the price up. And given the fact that they should be looking to take profits, this is exactly what should happen. WMS closed at $31.45 on Friday, right at its intraday high. This shows the stock has strength. Its intraday low was $30.95. I'd like the stock at $31.30, and my first price target is $35.06. When the stock reaches this price, I will sell half my position and let the remaining half ride. My second price target is $36.62. If the trade should go awry, my stop loss is $27.26. Finally, here is WMS's 6-month chart with Bollinger Bands in green, the 10-day simple moving average in yellow, and the 30-day simple moving average in red. We hope you've enjoyed this TradingTips.com video newsletter. Thanks for watching and good trading.
This Trading Tips video newsletter has been brought to you by Manny Backus's First Hour Trading System. Every day there's money to be made in the first hour of stock trading. This is the world of day trading, not for novices, unless you have a system. The First Hour Trading System. Visit firsthourtrading.com now and sign up for a free 30-day trial. You could make enough in the first hour of your day to take the rest of the day off. View more Trading Tips videos. Visit tradingtips.com. Sign up for our free video newsletters and become a successful trader today.